Hello there, forexbrokers.net here. This is the third video part of triple combinations. Elliott waves is one of the most interesting, not to say complicated, theories or trading theories ever developed. And this is one of the reasons why there are so many videos, especially as we advance more and more into the details regarding this wonderful theory. So far, on triple combinations, we explained a bit the theoretical part. This is how the most common triple combination looks like. And then we apply this principle on what the euro US dollar seems to form on the monthly chart. Whatever you see here on this video is only not a recommendation, by no means. It is only an idea derived by a pattern that seems to work on the monthly chart, but the same principles can be applied on the hourly chart, can be applied on the 4-hour chart, can be applied on the daily chart, can be applied on any currency pair, not only on the euro US dollar, can be applied on any market, as a matter of fact. Because the euro US dollar is the most popular currency pair among retail traders, and not only it deserves a try, if you want, for identifying such a pattern. So the price now is somewhere around at the end of wave A, and now the focus shifts with identifying a triangular pattern. At this point in time, all that an Elliott wave trader has to do, because we followed the logical process so far, is to identify the rules of a non-limiting triangle and see if they apply to the future price action. A non-limiting triangle has, like the name suggests, no limits, in the sense that it is always part of a complex correction. Almost always it ends a complex correction. The X wave in a triple combination can as well be a non-limiting triangle, but most of the times a non-limiting triangle forms at the end of the triple combination. Considering the time frame here, and if we are to imagine a triangle, then let's say that this would be wave A. Remember, the shape of the triangle doesn't really matter when it comes to the triple combination. How about a B wave, C wave, D wave, E wave? And this would be the end. Let me say that this would be the end of the E wave on the euro and the US dollar. This would be the end of the triple combination, and the focus should shift then on the B2D trend line. On the other hand, the triangle can go like this. So this is one possibility for the triangle. Another possibility would be that the market forms wave A, which is not completed. Then it goes with the B wave, C wave, D wave, E wave. Is it possible? Well, if you take the B to D trend line from here to here, and you connect the B to D, and if you take the ANC trend line from here to here, one can easily imagine a triangular pattern at the end of the triple combination. Only this time the end of the E wave would be here, which is very difficult to trade, especially on the monthly chart, because there is a big difference between what is now 1.1081 and 0.92. The only way to have an idea the nature of the triangle that the market forms here is to identify or to use the rules of a non-limiting triangle and apply them to the move that started here. For this, one should go on the lower time frames, count this X wave, look at this X wave as a corrective pattern. What can it be? It cannot be an impulsive wave because all X waves are corrective. Judging by the fact that there is no retracement more than 61.8, it means that it would be either a zigzag or a double zigzag or a zigzag family pattern. Anyways, the important point here is to identify the exact end. Either it ends at the top or somewhere around here on the lower time frames. And then from that moment on, calculate or counting this move lower. if we see a possible wave A ending here, then the chances that the triangle will be moving towards a B wave. If the end of the A wave is not in sight, then maybe the market will continue the move lower. Being the monthly chart, it's pointless to try to interpret and trade a triangle at the end of a triple combination. But in time, as the triangle will become obvious more and more, the focus shifts on the B2D trend line. But the same principles discussed here on the monthly chart are valid on all time frames. To wrap up triple combinations, they are one of the most complex patterns. They have three simple corrective waves. They always end with a triangle. They cannot end with they cannot start with a triangle, but they always end with a triangle. They may start with a zigzag or with a flat, but the most common variant starts with a flat. They have two X waves, and they form either as the entire leg of a contracting triangle or the last leg of a fifth wave extension classic impulsive move, or as the last segment of a terminal impulsive move. All these patterns and concepts are explained on this trading academy. So whenever there is doubt, just go and look at the rules, look at the logical process described many times, look at what all these patterns here discussed today imply, and you'll find out that the triple combination is just like that, a combination of rules and patterns to make up for a bigger segment of the market. Thank you for being here, and bye-bye.